All righty. All right, I'll stop tinkering. Sorry, I get obsessed. So good morning. How's the coffee? You got a new reload? There we go. Just trying to also find where the where the music was coming from. So anyways, good morning. Welcome to my office. We got the stock market opening very, very soon. Oh, five minutes? Is it really? I'm that late? Oh. I'm sorry. Cool. So anyways, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. So we're gonna go through and look at technicals and fundamentals, and I'll answer your question and we'll look at implied volatility for the stock market open and tons of things, huh? Tons of things. If you actually click in the chat and ask a question, I'll do my best to answer your question. So that makes you the boss and me a humble servant. So without further ado, let's go! Let me remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Ni hao ma. Hey, let's get going. Please answer the survey if you could. Okay, so I've observed a slight deterioration in the risk sentiment score. Yeah, it's been falling steadily every day. Huh? Yeah, down 0.24 over the last 24 hours. This change is primarily influenced by movements in VIX and the performance of the 10-year Treasury yield, alongside slight declines in major indices like the S&P 500 and NASDAQ. As we move forward, it's critical to keep an eye on these key drivers to gauge the market's overall health. Hey, that's pretty cool. Biggest movers, platinum's hot to go, HOTTOGO. Look at yields going up on the 10-year. Oh, no. That means prices down. So one of the things we look at is the 210 spread and the shape of the yield curve and all that kind of stuff. And it tells you how treasury traders, the treasury market, it shows you what they think about monetary policy going into next year. So it's another gauge to see, will the Fed cut? How many times will they cut if they do cut? Reading the tea leaves of the yield curve. Kind of neat. Yeah. Yeah, very neat. So anyways, that's why we track this stuff, because we want to look at professional traders for the stock market, for the bond market, for the treasury market, for the Forex market, for the commodity market. So, for example, we track soybeans, corn, wheat, copper. But we also track things like trade balance. Why? Why would for major economies around the world? Why would we do that? Well, that is Forex. X minus M. Money leaving an economy and money coming back to the economy. And that flow, in particular the net flow, produces a change in valuation of the currency. If money never crosses a border, then the valuation never changes. You see? So if you're a Forex trader, that's kind of like one of the most important things is to track net exports, or trade balance, as we call it. Or some countries call it balance of trade. But the thing is, that is a measure of Forex and the likely change in valuation based on the supply and demand of the currency in the interbanking system. So should we track that stuff? Yeah. Yeah. And thus we do. So these are the biggest winners. These are the biggest losers. Bitcoin down, not by much, but still hovering around 90K. Let's get an update on the news. China imported more crude oil from Saudi Arabia and Iran, Commerzbank.
US dollar Canadian dollar technicals. US dollar Canadian dollar corrects higher, but finding willing sellers.
Canadian dollar holds in tight range after jobs-driven shakeout. Scotiabank. China's crude imports jump in November. Commerzbank. U.S. dollar softens ahead of FOMC. Scotiabank.
JOLTS. Job openings to offer crucial labor clues ahead of Fed announcement.
United States Red Book Index, year over year, fell from previous 7.6% to 5.7% in December 5th.
Silver price advances slightly as markets anticipate Fed rate cut.
Cool. So anyways, going over to the headlines here, we are looking at JOLTS coming out. How about that ADP? I don't know if I like weekly. Have you guys decided yet? I don't know if I like weekly. Also, one of the things
Euro
got
holds
me
steady in tight range ahead of NA session. Scotiabank.
one of the things that got me thinking one time during a meditation is, can you trade ADP stock based on like these figures? You're like, well, Wayne, that's not the ADP. That's their customers. Yeah, but think of this. If last week they lost 13,500 customers, we'll call it, if each individual employee is a customer, because I think they charge their corporate clients a per employee fee, don't they? So here's my logic. If ADP is collecting 13,500 less per seat, fees, or they've gone up, but now they're collecting 5,000 more per seat fees or subscription fees, does the stock move with that logic of falling cash flows versus increasing cash flow? I don't know. I don't even know if any of that's true, but it got me thinking. Oh, what a dangerous thing to do, huh? You're a dangerous idea that almost makes sense. Anyway, tomorrow, Bank of Canada, and once that decision comes out, you should take the rest of the day off. Oh, unless you care about the Fed decision and the summary of economic projection, unless you think that's important. And if you check the YouTube, if you check the boob tube, I do have it scheduled for us. Hang on. Love is blindness and cold steel, hands so cold, too numb to feel. Hi, currency trader. My name is Wayne. Look at that with this COVID cut. Oh, give him a little kiss. All right, cool. So what I wanted to do is give you the linky poo. Yeah. So anywho, take a look at our risk radar. Boom, boom, boom. There we are. So when we look at what's been happening in the last few days. We've gone from red hot to not. Chill out, my friend. That's important. So we were having a bad November, then it improved. Then we started December at 5, and we've cooled off at 2. But I think we're just waiting for the Fed, and then it'll be game on. But the thing is, looking at 52 different variables over multiple time frames, at least we can track reality. Okay? Now, to get the reality, we look at the yield curve, the yield, the 210 spread, the yield on the 10-year, silver, volatility, the German stock market, gold, U.S. oil, the Dow, the Japanese stock market, investment grade corporate bonds, NASDAQ, U.S. dollar, 2-year treasury yields, junk bonds, and the S&P 500. We weight them, and then we analyze them over time and weight those to get a score, and then we make a composite score. And having analyzed these 52 different variables, okay, now remember, it's not just quantitative analysis. We're looking at what the other traders and investors are doing. And based on logic, we can interpret the likely why they're doing it. Meaning, we don't know their individual feelings, but we understand the logic of risk on versus risk off. And right now we're neutral. And then we could probably assume, whether that's a correct thing or not, but we can say, well, maybe it's the Fed meeting coming up and we're all waiting for that. In particular, it's not whether they cut or not. It's amazing how that's all you hear by the experts. Oh, we're really certain they're going to cut. Yeah, well, bravo. Bravo, genius. But what's really important, they're releasing a summary of economic projections, and then we can get that data and analyze it and see their forward guidance, because people are already telling me that the Fed's going to keep cutting interest rates into 2026 until we get to the neutral rate of 3.0. So that means a cut today and then 3 cuts next year. Guess what? That's not what the Treasury market is trading right now. Oh, snap. How do I know that? Because I have TRADARS, and we analyze the yield curve, both capital stock and capital flow, just like we do with the COT data. Cool. It's a little late to do trade planning, but if you want to check out JOLTS, and let's say it's less, okay? I don't know how, if we're going to be less. That is right, Richard. So, for example, I think it'll actually be greater. I don't think we're going to have a collapse in jobs yet, but whatever. And then we have all this data, but kind of late to be analyzing it now. I mean, this is why we have the data. You could have done this yesterday or last week even. We have a scalping radar and we have a vol radar. All this sentiment tab is included with the free subscription at traders.com. All of this is free. All of this gets, right? All of this could be yours, and no one gets hurt. Now, let's get pretty. Let's get jiggy with it. Cool. And let's see if my cards are loading. This has been chunky recently. Let's do euro dollar. Please load, please load, please load, please load, please load. I'm starting to figure out what is delaying and even crashing. I think this is crashing in the back end. Believe I have discovered part of what's happening, so I'll be able to fix this. This was working 2 days ago. Now it's not working. But trust you me, this is pretty ass kicking. Let me see what does work and if we can pull that up. Oh, look at that. It's lying to me again. It just went back to lying. I know that's a lie. Interesting. What is it doing? Let's go back. Yeah, it's the AI has developed a behavior. There we go. So that's correct again. Sorry, hang on. I'm trying to figure out a puzzle. So why did it just lie to me, and then why did it reload? So when I'm changing views, it's forgetting. Okay, all right. And then when it forgets, it lies. Okay, I think I can figure that out. So we can look at NASDAQ. Is this true? Give it a few seconds. We have the right price. This looks fine. Okay, it's missing 30 days. And that might be enough to crash this whole thing. But give it a second, a few more seconds to load. Now, just so you know, we are storing at least 30 days worth of data. I think it's actually more. Running our moving averages, running a MACD, running pivot points, and doing risk assessment, COT assessment, and seasonal assessment. And then through that, running sort of a, what do you say, a divergence check. So when you have a 2155, let's say the 21 is below the 55, that's bearish. But what if price is above? Is it bullish or bearish? Well, in that case, it's neutral. And so all of that's been put into the large language model as well. And the cool thing is it was drawing all of this with linear projections, not 7 days in the future, but 14 days in the future. And then here's how I effed it all up. I said, hey, man, we have a line for 21. We have a line for 55. We have a line for linear projection. And then you'd use a line for price. Like, that's a lot of lines. Can you make this chart a Japanese candlestick chart? Oh, yeah, no problem. Crash. I crashed it. So anyways, I'll fix it. But it's here. It's here. Wait till it works. You'll be impressed. Wayne, it doesn't work. I'm like, okay. Just trying to see if any of these will load. Okay, well, we got gold. That's the right price. I'm assuming that seems about right. But this is wrong, isn't it? So something is crashing in the back end. We know COT is not net short gold. We know that. Come on. All right, so I'll see if I can fix that over the next 24 hours. But cool progress anyways. I hope you see the potential for this. Now, Richard is bringing up bonds, and I think what you mean isn't bonds. I think you mean treasuries, but I have it as bond radar too, so I understand you. So you're saying bonds are pricing out cuts. How can you determine that, Richard? Go with the flow. You're right, but I want to know what you're looking at. Okay. What are you looking at to determine pricing out cuts? Share with you the methodology, and then I'll show you what we're doing, and I'll share our methodology, and you might just like it. You're like, you know what, Wayne? Not only are you smart and beautiful, but I love your modesty. And TRADARS. Okay. Okay, so you're looking at one yield and the change in that yield over time. So our last recent move, I think we got down to 4.01. Then it went to 4.1, and now we're on our way to 4.2. And you're saying, well, the direction of that means yields up, treasury prices down, and therefore those treasury traders that priced in 3 cuts next year, which is what most people are talking about right now, are changing their mind on that, and it's less than 3. We don't know how many, but they're pricing out a cut. Is that what you meant? So I agree with you. So let's take a look and see if I have built something that will help. This is the yield curve, Richard. And the green line is the current yield curve. Okay. And the dotted red line was the yield curve 30 days ago. So yields have fallen on the 1 month, 3 month, 6 month, 1 year. That means money has been flowing into them and pushing price up and yield down. The green bar is the mathematical derived volume of purchases. So you should be able to look at the big green candle and say, or not candle, but bar. You look at the big green bar and you're like, oh, dude, money has gone in there over the last 30 days. Look at that. A lot of money has flowed into the 1 month. Quite a bit has gone into the 3. Some went into the 6. Not much went into the 1 year. And even money came out of the 2. Cool. And so you can see that yields have fallen here and yields have fallen here. Okay. And the crossover is somewhere between the 7 and the 10. So anyways, money is coming out of the 10-year T-note and the yield has risen from 4.12 to 4.18. And the 7-day flow has been bearish. That's what you're talking about, Richard. But now you can just see it. Money is moving to the short end of the yield curve and coming out of the long end of the yield curve. Whoa. And now you should be able to say, oh, well, that's probably changes in people's perception of monetary policy in 2026. And almost all the knuckleheads on the financial TV channels, they don't have this kind of insight. They're still talking about the Fed dropping interest rates all the way to the neutral rate of 3. We're at 4. So there's your 4 cuts to get from 4% to 3%. That's 4 quarter-point cuts. Well, that's not what the market, right? That's not what the Treasury market says. Yeah. It's pretty though, isn't it, Richard? Okay. It's not just a beautiful pig, but it's also got lipstick and a nice sundress. Assuming you like bacon. Okay. Then we say, well, what about others? If that shows a change from right betting on a less dovish Fed, then what are the other markets doing? What's the stock market doing? How do they feel about risk on or risk off? Let's just look at the stock market. What about gold traders? Are they hedging inflation, volatility, or debasement? Okay, or the roof. The dollar. How are they trading the dollar? How is Forex trading the euro? How is Forex trading the yen? And how do these relate to different types of risk on, risk off positioning? Okay. Now, to answer that question, you're going to need something like, oh, I don't know, correlation. So you know what to trade if risk is going up. Risk on is if the risk is becoming more favorable or less favorable. So just so you know, that's free. All you have to do is go to the risk radar and go on the correlation matrix. Missing. Cool, right? Yeah, so we have that data. But anyways, so there's the bond market, really treasuries. The treasury market suggests this, a change in the shape and flow of treasuries, which then can be translated into risk on or risk off. So less risk on. Okay. How are other risk assets being traded? More risk on or less risk on? Okay. And then an interpretation, but this is stale. That's why I put the dates here. So things need to be. But explanation. Explain to me, Lucy. Okay. So we have that there. So this is pretty killer. So we got that jolts coming up. Is it 6 minutes? Is that right? We got jolts coming up. Okay, we're currently at 7.2 in a downtrend. And are we still delayed? Updated December 9th. Yeah, so we still have government agency delays here. But this was updated today. And we have August, so I guess September's coming out today. Or we're going to skip that and go forward. Is that right? But anyways, what we're looking at is direction here. The normal rate is probably closer to 4, but we're at 7. COVID, okay, jumped us to 11 or 12, and so now we're back to 7. And well, we're wondering, are we going to go back to 3.5? If the economy is slowing down, here's the logic. If the economy is slowing down and we're losing jobs and we're going into recession and the Fed's going to need to cut because NFP is going to go negative, well then, if companies are laying people off, they're not going to be advertising for new employees, are they? No. So if this is falling hard and fast, most likely NFP is going to be falling hard and fast. Weekly claims would be rising hard and fast. And that's why this is important. In particular, because we've been missing some data, like we don't even have an October NFP. We're going to get something coming out next week, but what is it? How reliable is it? All that kind of stuff. Kind of a big, fat question mark, huh? So anyways, isn't that pretty to be able to see the historic data? Huh? That we have data on jolts going back to February 2011. Cool. So where are we now? That's the thing. If we're just going to report November and skip the missing ones, this could drop below 7, huh? Cool. So let's get the news live. Again, we'll use one of our free tools for that.
Copper hits record high near $11,800 amid strong start to 2025. Commerzbank. Yen softens amid quiet market conditions. Scotiabank. Gold. BIS report warns of gold price correction. Commerzbank.
Energy sector surges while tech hits resistance. Notice we have September and October. Today's market dynamics. WH Economic Advisor, Hassett. There is more room than a 25 basis point cut. Pound holds steady in mid 1.33's range, Scotiabank. Euro pound price forecast, technical setup. Neutral as pair trades between key moving averages.
OPEC production declined in November despite increase in production quotas. Commerzbank.
All right, so notice we're doing 2 months. So we're up to date for August and we're missing September. Well, that's because September comes out in 34 seconds, but so does October. So 7.2 and then 7 is what we're thinking. That's not far off. That's within the standard deviation of our previous calculation. But the big news is if we have a 6 handle. Seven, 6, 5, 4, 3, 2, 1. Jolts, 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 jolts. All right, come on. What do we got? Talk to me, Goose. Chicka, 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 Slim Shady. What are we going to do? Is the job market collapsing? Wait for it. Wait for it. 7.6, it went up in October. 7.6, oh my God, it's red hot. Oh no, no need for the Fed to cut. Oh no, snicker schnocker. Nobody's going to like that. Let's go. Let me close this. Boop. All right. Let's see the reaction. Dollar strength. Yep. Got to price out that cut. Yen down. So, yeah, you should be trading yen pairs. Aussie yen's probably doing great. CAD yen, maybe. I mean, Saudi Arabian low on production. That helps Canada. Brent down. WTI
United States
up.
JOLTS job openings came in at 7.67 above expectations, 7.2 mem in October.
Kiwi yen probably doing fine. Yeah, makes sense. Another cut coming out that's going to change the yield curve. Money's going to go in the short term, come out of the long term. Changing the slope and shape of the yield curve. Don't worry, we'll have all that tracked. I'd agree with you. Most of you are slightly risk on, but now we got a conundrum because It's good that the economy is not crashing, but some people had already priced in lots of Fed cuts next year. And as I just spent a half an hour talking about,
United
it
States
doesn't
Jones
seem
job
likely.
openings came in at 7.65 DNM, above expectations, 7.2 MEMS in September.
Yeah. Holy schnicker schnucker. Yeah. So there you go. Isn't it nice to have live news, especially one that's a squawk box? Let's take a look at. So let's do dollar pairs and see how this works with what has been going on. Should we do exotics? No. Okay, we'll do that one. That should be going up. That should be sideways. That should be up. Well, sideways, actually. Now. That should be down. Okay. Yep, yep, yep. All right. Let's see. Dollar strength. That was already in play. Probably get some more strength here moving forward. So put this on your to-do list. Remember the methodology. You open up a notepad and you create your watch list. Okay. So you're like, okay, I want to check this out. In this version, I will leave the notes. Okay. Remember, this is only pattern recognition. Down. Yeah, that made sense. Remember, I already called that out. That's down with an opportunity. That shows weakness with an opportunity on multiple time frames as well. Up, down, up, down. Yeah, I would say up and then up. So that could be, I think it's going to be sideways for a little bit, but I'll put that on a maybe. Okay. Aussie. No, I think that'll collapse on us based on what we just saw. That might collapse up and down and sideways. Triangle is non-directional, up and okay, so that's all there is. Okay, so there's not a lot yet, but at least I can start with patterns that are in play, not in the way. All right, so I go to my Trader's Way MT4 and I say, okay, what's my hit list today? An hourly chart USD yen yen. Maybe up, which I've already planned. Look at, oh, that's Kiwi. Look at that Kiwi trade I put together. Holy crap. Holy crap, that's working. That's working real nice. Remember, it's supposed to end pretty soon, too, was the other prediction. What are we looking at? USD yen. Yeah, that's not even something I typically trade. So let's do this one. And we want hourly chart. I guess we can leave it there. And we had a rising wedge. It's forming, and we should get to 57. We're almost there already. This came out 2 hours ago. So if we had made a move 2 hours ago, we'd almost be at target by now. Yeah. So let's change this template to day trading bullish bias. And we're through today's target. So be hesitant. Let's go to swing trading bullish bias. And we're at target. Look at the beautiful weekly swing trade. Okay, let's look at the bigger picture then. We will look at position trading, bullish bias. Beautiful setup there too. And where is the target? 59.5. So I guess we'll just call it 160. We're going to hesitate here. Yeah. Do we have the guts to do this in December? That I'm having some doubts with. But it is what it is. It's moving. So are you going to be in a buy a dip mode? Are you setting up tomorrow? That's cool. Cool. And what was the other one? Go to our notes list. Swiss franc, also the hourly chart, an ABCD forming 4 hours ago. So let's go back to let's go to that one specifically. We can go through the same type of exercise. Go further out. Look at that. Look at the trading on this. So gorgeous. Look at this. Oops, where's my drawing tool? Buy here, exit here, buy here, exit here, buy here, exit here, buy here, and the exit is up above. Isn't that cool? Yeah. And I'm going to give this to subscribers of TRADARS. I'm building an infrastructure to give you access to these hundreds of templates and files and EAs and indicators, all that kind of stuff. But guess what? Our big fat plan today is, so complicated you have to be a rocket surgeon to understand. You buy it here and you exit there. Oh, wait, that's not rocket surgeon stuff. No. Now, we were on an hourly chart, okay? And what it was suggesting is is this and this. And I agree with that. That's actually tomorrow's trade plan. You're like, wait, what? What? Wayne, what? What are you talking about, Wayne? What? I missed it, Wayne. Say that again. Okay. Let's go back to TRADARS. Remember, it's watching 5,000 charts in real time. And so that you don't. And it looked at this and it reported this to us 4 hours ago. So we were in the down. There's the role reversal. Projection is up and then a down. And then I would say B is the new buy zone. Okay. Now, look, I want to make sure you can see it. Because there are two different methodologies going on. Okay. Up and then hesitate, right? I would have it down here. Up to 81.10. Now, this methodology says up to 81.04. There's 6 pips different. Different methodology, different mathematics. They're saying the same thing. And then what happens here? There'll be some profit taking. It'll come down. Now, Aiden says 80.91. And I'm like, well, I don't know anything about that, but I'm thinking here, and then this makes a higher high and a higher close. So then this moves up to about here. And this says 80.91, and I say 80.85. So now again, we're 6 pips apart. And here's tomorrow's trade plan. Now, I can do that, but you might have missed this. But TRADARS doesn't miss this because Aiden is a machine. So you can't watch 5,000 charts at once looking for reliable, repeatable patterns. But traders can do that for you. So now that you can go through your process correctly. And that's how you do it, everybody. Yeah. Now, don't forget tomorrow I'm doing FOMC live. So I don't think I want to do a 9 o'clock webinar here on YouTube. Why don't we just do the 2 o'clock webinar on YouTube? Is that a fair trade? But TRADARS subscribers, don't worry. We'll do our 7 a.m. But we won't do an 11 if we're doing a 2. Especially if the market's stalled out. Like, what the heck are we going to talk about? So anyways, tomorrow will be a little flexy. So I hope you're amazed with all the momentum we're making in the technology side of our analytical platform. I hope it makes you informed so that you take control, so that you can build consistency, so that you can develop confidence. Yeah. Cool. Oh, and if you don't have these chart templates, I think you're doomed. If you don't know this, you're doomed. Oh my God, right? So anyways, I'm going to put these templates inside of TRADARS. Nice. Hey, leave a comment, click the thumbs up, leave a like, leave a comment, subscribe, like, comment, leave a comment, like, thumbs up.